We are operating as a unlicensed securities exchange in the USA, bro. Those are perhaps the words that will sum up the early 2020 cryptocurrency crackdown in our future history books. Ladies and gentlemen, welcome to The Plain Bagel. I'm your host, Richard Coffin. It's been a pretty quiet year for cryptocurrency so far, which makes sense since it's hard to outdo the spectacle that was the collapse of FTX last year, not to mention the other stuff that's been going on. But things are really starting to heat up again as we got the news on Monday that the SEC is charging Binance, which is where we got that beautiful quote from the intro from, as well as Coinbase, another well-known publicly traded cryptocurrency exchange. Now, some did see this as being a long time coming. Back in April, we even saw the SEC charge a smaller company, Bittrex, for itself operating as an unregistered exchange. But the reason these two cases are notable is that on the one hand, Binance is itself the largest cryptocurrency exchange in the world, and Coinbase is a publicly traded exchange, which, as you'll see, has brought up a lot of discussion. And really, with this news being released, you had two very distinct reactions. You had some people celebrating it as the SEC finally reining in the chaotic sphere of cryptocurrency after a lot of inaction and fraud. But on the other hand, specifically with Coinbase, but by extension, the Binance lawsuit as well, we're seeing a lot of people lament the move, seeing it as the SEC overstepping and directly attacking cryptocurrency, trying to kill the industry. So what exactly happened? What is the SEC accusing these companies of doing? And what will the implications be for the area? Because regardless of where you sit on the fence, there's really no denying that this could be a defining moment for cryptocurrencies as a whole. Well, we'll start with the Binance case since we found out about it first on June 5th, and it's kind of a more convoluted situation, with the SEC bringing 13 charges against Changpeng Zhao, or CZ as he's commonly known himself, who is the owner of Binance, Binance Holdings Limited, which runs Binance.com, as well as its US-based affiliate, BAM Trading Services, which runs Binance.us. Now, the reason there's a US subsidiary here is that, as you might know, Binance.com itself, which is headquartered in the Cayman Islands, is not actually allowed to operate in the United States. It doesn't meet a lot of the regulatory requirements. And so they created this US subsidiary, which was supposed to be an independent institution, but as we'll see from some of the claims here, that might not necessarily have been how it was operating. According to the press release, the lawsuit has four main complaints. The first of which is that Binance and its subsidiary operated as an unregistered exchange, broker, and clearing agency. Now, if you aren't familiar, an exchange like the New York Stock Exchange, for example, simply refers to an institution that connects buyers and sellers, allowing them to trade and facilitating those trades. A broker-dealer, on the other hand, is a company that does participate in the trading of securities, either for its own intentions or on behalf of a client. And a clearing agency sort of administers the settlement of a trade, making sure that the funds and securities go to their new respective owners. And the main complaint here is that Binance fulfilled all these roles without being registered with the SEC. You see, investment institutions like exchanges need to be registered in the US under the SEC. It allows the SEC to get access to a lot of information, comes with reporting and auditing requirements. But Binance is only registered as a money transmitter, which is similar to something like PayPal or TurboTax. The second complaint in the suit is the unregistered offer and sale of crypto assets, with them specifically citing BNB, the exchange's native cryptocurrency, BUSD, which is their stablecoin, and as well as crypto lending products, Simple Earn and BNB Vault. With normal securities, you need to have these securities registered again themselves directly with the SEC, and clearly that wasn't the case with these products. The SEC also throws in here Binance.US's staking as a service program, which, if you aren't familiar, staking refers to sort of depositing your cryptocurrency. It helps with blockchain transaction validation, and you get a reward or return for doing so. And Binance would pool customer assets, stake them on these platforms, and then split the return amongst customers who had their funds in the pool, with the SEC claiming that not only was this another unregistered activity, but that the international Binance body actually controlled the assets that were part of this, which again, were supposed to be independent under the US subsidiary. The third complaint is failure to restrict US investors from accessing Binance.com, which is the Cayman Islands-based service, with the suit alleging that CZ would allow and conceal many high-value US customers' continued access to Binance.com, with that quote from the intro being highlighted here as evidence of this, with that allegedly being a message sent from the chief compliance officer of Binance to a colleague. And the final complaint is that Binance misled investors, with the SEC claiming that Binance assured investors that Binance was using market surveillance and controls to detect and prevent manipulative trading. But again, according to the SEC, there's actually quite a lot of fishy activity with the platform, and this is where we get into some of the more concerning allegations around the commingling of customer funds. And it seems to involve two market makers for the company, Sigma Chain and Merit Peak. both of which are owned by CZ. Now, if you aren't familiar, a market maker is someone who both buys and sells within a market to help boost liquidity. And it's not illegal, it's actually encouraged by a lot of places. But when it comes to Sigma Chain, the SEC alleges that the firm was carrying out wash trades, whereby it wasn't buying and selling with other investors, but rather itself, effectively canceling its own trades, making it look like the cryptocurrencies had a lot of trading activity, even though no money was changing hands. The SEC also claims that funds were sent from customer accounts to Sigma Chain and Merit Peak. For example, they highlight the exchange sending $20 billion, allegedly including customer funds, to Merit Peak's account, with the suit even highlighting an instance of money being sent to these companies, which was then used to buy a yacht, which would definitely be illegal if it involved customer funds. And if you're thinking, geez, the commingling of customer assets, secret trading companies, that all sounds pretty familiar. Yeah. Now, unlike FTX, we don't have any claim here that Binance has lost customer assets, which was really the biggest story around FTX, was that it was missing billions of dollars that it owed its customers. But given that FTX went from claiming that they had all their customer deposits to filing for bankruptcy, a lot could come to the surface as this lawsuit plays out. So that's the Binance lawsuit. And as mentioned, at the same time, we have the Coinbase lawsuit, which came out June 6th. And here it's a lot more clear cut, not as many details as with Binance. But the SEC is alleging that Coinbase was operating as an unregistered, again, exchange, broker, and clearinghouse, and that they had the unregistered offer and sale of securities in connection with staking as a service program, as well as just the general sale of certain cryptocurrencies. Now, with the announcement of both these lawsuits, we've seen both BNB, the cryptocurrency for Binance, and the stock for Coinbase drop quite a bit. And even though the SEC seems interested in pausing or stopping operations for both Coinbase and Binance, it is worth highlighting that these are not criminal cases. The SEC is suing Binance and Coinbase, but they themselves don't have the authority for criminal lawsuits. So then, why all the hubbub? Why the discourse around the SEC's decision here to charge these two institutions? A lot of it has to do with the contention around cryptocurrency's definition as either a security or a commodity. Commodities like oil and wheat are not regulated by the SEC, and there aren't as many rules dictating how these things can be traded. But securities are regulated by the Securities Exchange Commission and have much more stringent rules when it comes to their trading because it involves an investment. And when it comes to cryptocurrency, it's still an active debate about whether they fall under commodities or securities, and as a result, the SEC's jurisdiction. In past cases, there's been something called the Howey test for determining if something was a security. It involved seeing if the money being contributed here was being used with the intent of earning a return and the money being put towards a common venture. But there have been recent comments by the SEC chair Gary Gensler about how everything but Bitcoin in the space of cryptocurrencies should be considered a security. And what's interesting is that in the suit against Coinbase, the SEC actually identifies 13 crypto assets which they highlight as being securities that need to be registered with the SEC if they want to be traded, with the suit not explicitly mentioning Bitcoin or Ethereum. There are also a lot of people calling the suit against Coinbase hypocritical, given that it was only a few years ago that the SEC actually approved the IPO of Coinbase onto public markets, meaning that the same institution that approved this company to trade publicly among investors is now suing it for doing what it said it was going to do in its IPO. Now, I will take the moment to highlight that the SEC has highlighted that Coinbase's filing was not an opinion or endorsement of the legality of the underlying business. And as weird as it seems, the process is really just about making sure that the company will do what it claims it does. But I do understand the frustration. I know historically, I've not been the biggest defender of cryptocurrencies, but I can understand the arguments, especially when it comes to the point that some people have highlighted about how it doesn't seem possible to have a registered cryptocurrency exchange. The SEC recently highlighted that no crypto asset entity is registered with the SEC as a national securities exchange. But it's not clear if that's because no one's tried or because it is impossible, either due to massive barriers to entry or there just not being a current framework for operating a crypto-focused exchange. And this was something even highlighted in a tweet by Brian Armstrong, the CEO of Coinbase, about how they weren't able to become registered as a cryptocurrency exchange. So you do end up with a system where the SEC is saying that, you have to be registered as a securities exchange if you want to sell cryptocurrency, and then going out and suing people before there are any rules dictating how things should be operated. With the same issue applying to the charge of being an unregistered broker, with even Robinhood, who is a registered broker, having separated the cryptocurrency arm under a different company, which is not registered. Anyway, as mentioned, could be a defining moment. We might get more clarification about what is and isn't allowed, what's a commodity, what's a security, and whether exchanges can continue to operate in this space. Binance will have to wait and see how legitimate what they were doing was. That quote is obviously a little damning, and the SEC is actually looking to freeze Binance's US assets, which would naturally be devastating for any exchange. But when it comes to Coinbase, there is kind of those more fundamental questions of security versus commodity. Obviously, the suit so far is limited to companies offering services in the cryptocurrency space, so not the cryptocurrencies themselves. But some do believe that this is the first move by the SEC to try and gain more control over crypto as a whole, especially given Gary Gensler's recent comment that followed these suits about how digital currencies weren't needed, which many saw as him showing his true colors in the situation. Even still, most people were aware that cryptocurrencies were operating in a regulation purgatory, and that there was likely going to be a crackdown in the future. You should certainly be aware that if you're an investor in the space, like I mentioned, I don't advocate for the space myself, but if you do choose to put money in that area, be aware that not only do you have risks around the fundamentals of what you're buying, but also whether the government will intervene and impact the value of that thing. That's not an argument about what should happen in the space. It's just stating what is a possibility and what you need to be aware of dealing with cryptocurrencies. Anyway, that's the story and the video for today. I hope I helped to explain a few things and clear up some of the noise. If you like this video, please do make sure to like, subscribe, all that good stuff. It does help the channel tremendously. And let me know your thoughts on all of it down below. What are your thoughts on the cases as a whole? Do you think they're just and righteous? Or do you view it as the epitome of evil? Let me know regardless. Thanks for joining me today. And as always, be safe out there.